here with Martin Stephan. He's a very well-known resource analyst and newsletter writer in Germany. In fact, the publishing company he is part of is the largest publishing company in Europe. He runs Travel Trader and Commodity Investor. Martin, thank you for being with us today.
It's a pleasure.
Martin, I want to get your European perspective on the situation in Greece. In the United States, we're told that if Greece defaults, if Greece exits the euro will implode, and we will see financial Armageddon, Lehman Brothers times 10. What are your thoughts on that?
I don't think so that this is going to happen. It would be by surprise a few years ago there could be some kind of turmoil because of this event, but we know since many years now that there is a problem with Greece. We had already one haircut, which was without any problems done. So if there will be another haircut, maybe to 0%, everybody is hedged against this. I cannot imagine that one bigger bank or one bigger fund has not in the last years put this Greece position into some kind of hedging. So I don't think it will matter for the euro system. It will matter for Greece, of course, and the euro as a currency will be a little bit stronger.
Okay, so that's interesting. What you're saying, the euro would get stronger, which it kind of logically makes sense. You get rid of the weakest team member,
exactly.
You're going to be stronger. But what about the contagion that everybody fears and these defaults? I mean, I think it was roughly $400 billion that could be defaulted on that would enter the financial system.
I think the problem which would occur if Greece really would drop out of the zone would be that speculators or maybe normally a normal investor would think, hey, it happens once, it can happen twice. So which country is the next one which has to get out? That of course could spiral into a new direction for hitting this one country, which is the next, which really has problems. It could be one of the older ones, which Portugal, Ireland, Cyprus, which are already under surveillance. But it could be Spain or Italy too. If that would occur, then of course the euro will not get stronger, it will get weaker, and we have the whole thing again, which we had in Greece. The last weeks already had proved that the verbal intervention of Mario Draghi has calmed down the market. So right now, the yields of Spain and Italy, and even Portugal, Ireland, even Greece, come down. There is no new wave of speculation against these countries. I'm not sure if that will stand for a long time, but right now the market is relatively calm. So that means that if Greece would get out, I think Spain and Italy will be not in a position to be addressed as the next possible victims of this.
In this environment, where are you recommending people invest their money in right now?
Regardless of the euro situation, most other currencies are not a better choice as far as I can tell. Of course, whenever there's some kind of turmoil, the dollar will get up or down a little bit against the euro, but there is no perspective in my view that the dollar will be a much stronger currency compared to the euro for the next years. I don't think that. All currencies are weak. The British pound is weak, the Japanese yen is weak. They are all totally into debt. They have all the same problem. So the only choice, what I think investors have to stay with money, is to choose the only money which is there for a long time, which is gold.
With the precious metals, are your subscribers, are you recommending that they buy mining stocks at all, or are you guys only in physical precious metals?
No, because of the trading approach both newsletters have, which I write, there are recommendations out for gold companies, for silver companies. Of course, there's the idea that everybody should have some precious metals as an insurance to come along. I like junior gold companies and producers, but I like exploring companies too, like for example Brazil Resources, BRI, which is doing a great job for an exploration company. It's always about people. When you want to invest in companies which are not into production, you have to be absolutely sure that the management behind these companies is doing the right thing, have the right connections, has the right approach, and Brazil is the right country to do it.
I'm very familiar with that company. What are you recommending as far as your subscribers' portfolios? What amount would you put in an exploration company like a Brazil Resources?
In our portfolio, because of the good performance of the stock, we are up to nearly 10%. We started with 5 or 6%. Now we are 10%. It's hard to tell how much percentage of your net value should be into exploration companies. In our case, we are up to 30% into exploration companies. I will not increase this in the short term. I think that these bigger mining companies are just transforming into value stocks because of the dividend which nowadays they pay to the investors. I think that's opening up a whole new round of investing in these companies. There's so much more money for value stocks available, which are paying dividends, which are having yields, than just the ordinary resource investment guys who are always shoving around the money, but no new money is coming to the market. So I think we will get a whole new situation when it comes to yield, mining, gold, silver.
Now, how about the environment over the next few months? What are we looking at as far as with the U.S. election, the Euro crisis? How do you see things playing out?
Really, it's absolutely hard to tell. In Europe, the U.S. election is not a big focus because of our own problems. But of course, it's an important election. But because for the next 3 to 4 months, it's meaningless which candidate will win, because it needs some time to change whatever party will win this election. It looks the way that we will have some calm months coming up, where everybody is into this normal way of investing money, not to have the fear factor. So we see a little bit of risk on place. That means that stock markets should perform very good. That should work for a weaker dollar, which is always good for commodities. Base metals didn't have done a lot of in the last weeks or days to the upside, but precious metals have. So I like silver and platinum, gold too. I think with the last days of the breakout of the technical formation of all metals, of all 3 precious metals, I think we will see really some more very good days and weeks for the precious metals complex, including mining stocks.
Do you have any short-term or long-term projections of price targets for precious metals, for silver and gold?
I think gold will go to a new record next year. I'm not sure if we really are going to the roof in the short term. I think that will not happen. The wild card here is the rating agencies. They can come up every second, every month, every day, and put on countries on the watch list again, or just cut them from AAA to AA, and that would always mean that the risk-on situation we have will transform into risk-off. So even if the precious metals will appreciate, I think we will get some weeks, some months where the prices will get down again. So it's really hard to give a timetable when these prices will really go up to new records. But I think, in my view, gold right now is a good chance to get at least to 1800 to 1900 in this year. And normally that should be good enough for next year to hit 2000, which would be great for all these companies into gold, as for the producers especially, because I think we will not get any new cost overruns.
Martin, if someone would like to reach out to you or subscribe to your newsletter, where would they go?
Best is to go to our website we have for the whole publishing house, which is investor-verlag, the German word for publishing.de.
We'll definitely put that on the bottom for people can see that. Thank you very much.
Pleasure.
For more unconventional ideas, please visit crushthestreet.com.